Realty income got its start back in 1969 with a single investment in a Taco Bell. Today, the retail REIT owns thousands of properties across America that are leased to hundreds of tenants operating in dozens of industries. And although retail properties account for most of Realty income's rental revenue, they also have a large amount of industrial warehouses, which generates almost all the remainder. This amazing monthly paying dividend stock just recently announced yet another dividend increase, which marks its 121st increase since 1994. Now in this video, we are going to do an updated overview on Realty income, what the stock has to offer, and why I've been recently smash purchasing hundreds and hundreds of shares of Realty income as of lately. Now we're going to go over all this and more. Right after you please drop a like in this video and subscribe for more content like this in the future. So first, some more background on Realty income as a company. Realty income is a REIT, or a real estate investment trust, and all the properties are under long-term triple net lease agreements, which simply put means that all of the property's operating expenses, the property's maintenance, utilities, taxes are all left to the tenants, which is why triple net leases are one of the most popular lease agreements. And with this lease structure, it generates predictable cash flow to fund monthly dividend payments to Realty income shareholders. And on top of that, Realty income, compared to the other REIT aristocrats in its class, has a slightly better credit rating, higher yielding dividend, especially because Realty income stock price has been beat up a lot as of recently. And on top of that, Realty income has just about the same or similar growth projections to any of the other high quality REITs in its class. Now, Realty income has paid uninterrupted dividends since the firm's founding and has increased dividends each year since going public back in 1994, making Realty income an obvious dividend aristocrat. And overall, Realty income's predictable cash flow, strong balance sheet, disciplined approach to acquiring properties, portfolio diversification, and access to low-cost capital historically makes the firm's dividend among the safest out of any REITs in the market. Now, even with Realty income's most recent dividend raise, I think it is important to note that even though Realty income does have a history of raising their dividends consistently year over year, the actual dividend raises aren't necessarily all that huge. For example, back in 2014, a share of Realty income was paying around 18 cents per share per year, and just about 10 years later, the dividend is only about 6 or 7 cents more per share per year. I think this is important to note because Realty income might not necessarily offer the biggest dividend growth out there, but that's definitely to be understood with the type of investment vehicle that Realty income is, and the fact that Realty income does offer and has offered such a consistent long-term dividend with still the many consecutive years of small but consistent dividend raises still makes long-term investors like myself very, very happy. REIT does offer a massive monthly dividend if you ask me, but also, as you see right here in the max chart, offers some massive capital appreciation on top of that. Realty income's share price is up over 660% as of all time. And Realty income is currently trading in the low 60s, which in my opinion is making it a great buying opportunity, which I have been doing a lot of. And you'll see more of that towards the end of the video. The spread on Realty income's 52-week range is actually pretty big. 55.50 as of the low and 76.06 as of the high. Now, Realty income is currently offering a forward dividend yield of just over 5%, with an annual payout of $3.07, a payout ratio of around 70, a 5-year growth rate of 3.75, and 26 years of dividend growth. Realty income does also pay a monthly dividend, and with it being one of the safest dividends in my overall portfolio, even though Realty income isn't an ETF and it's a single name stock, it's one of those stocks that allows you to sleep pretty good at night. Now, what's also impressive about Realty income is the overall total return off of many different time frames. Off the last 5 years, Realty income has almost returned 50%, where the S&P has returned almost 60%. So not all that far behind the S&P 500. And with Realty income being heavily diversified, you do have that peace of mind, knowing that pretty much whatever the market or the overall economy throws at this REIT, they will likely be receiving most of, if not all, their rental payments on a monthly basis. And this is honestly the case because even back in 2020 when everything shut down, Realty income still was receiving the majority of all their rental income. Realty income's top 10 industries are 10% grocery stores, 8% convenience stores, 7% dollar stores, 5% home improvement, restaurants are 5, drugstores are 5, restaurants are 4, health and fitness is 4, automotive is 4, and general merchandise is 3. Also interesting enough, this is Realty Income's client diversification, and as you can see, there's all sorts of different, very, very high-level companies in this list. Realty Income's top 20 clients are Dollar General, Walgreens, 7-Eleven, Dollar Tree, Wynn Resorts, FedEx, LA Fitness, B&Q, Sainsbury, BJ's, CVS, Walmart, Lifetime Fitness, Tractor Supply, AMC Theaters, Red Lobster, Regal Cinemas, Tesco, Lowe's, and Kroger. All super high-level clients that are going to be around for a long, long time to come. One thing that's not as diversified when it comes to Realty Income is their actual property type. Realty Income does have the majority of all their properties being retail, with industrial being 13%, gaming being 2.8%, and other being 1.9%. Realty Income also has the majority of their property in just a few regions, the top being Texas, United Kingdom, California, Illinois, and Florida. Another super important metric when it comes to Realty Income is obviously going to be their occupancy. How much of their overall properties are currently leased out? And as you can see historically, since 1992 or even before, the majority of Realty Income's properties have always been leased, with 96% being pretty much the lowest that you've ever seen. And as of recent, 99% of all of Realty Income's properties are leased and have cash flow coming in. So as of recently, I did purchase over 500 shares of Realty Income in this one portfolio. And this is because, simply put, in my opinion, Realty Income is currently trading at a price at which I don't think we're going to have all that many more chances to grab shares of for all that long. Whenever in the past Realty Income's dividend yield reaches over 5%, it seems like it doesn't last all that long. For me personally, being more of an income-focused investor who also has an interest in real estate, Realty Income is a no-brainer, and I will likely be grabbing even more shares of Realty Income from here. Now, another reason on why I've been adding so many shares of Realty Income into my long-term dividend growth portfolio is because of Realty Income's defensive properties. What I mean by that is around 90% plus of all of Realty Income's rents are derived from sectors that are resistant to both near-term volatility in the cost of living levels and long-term dynamics associated with e-commerce. And Realty Income's 3-year historical beta of 0.58x, in combination with continued dividend growth, is clear proof of that. Also, like I was talking about a little bit earlier, me being more of an income-focused, more conservative investor that doesn't necessarily like latching onto companies that don't have all that long of a track record, with Realty Income declaring 635 consecutive monthly dividends with a CAGR of 4.4%, the company has delivered a compounding annual total return of around 14.6% that has been backed with years and years of positive growth. So I reiterate, Realty Income, in my opinion, offers the best of both worlds for long-term dividend growth investors like myself that are also somewhat afraid of market volatility. Ticker symbol O, along with any other stock in the market, is going to be affected by different dynamics in the market. But when it comes to picking a dividend stock that has a quite decent starting dividend yield along with long-term dividend growth and capital appreciation, it's hard to find a stock with a better position to get into than Realty Income as of right now. But I want to hear what you guys think down below. Do you currently own any shares of Realty Income? And if you do, how many shares do you have? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.